Good morning, everybody, and this is your S&P 500 setups for today. So again, word of warning, I'm not here next week, so this will be the last video. We'll pick up again week after next. Non-farm payrolls today. We were ranging. We dropped below the bottom of the range, which was, call it 5,500. We did drop below it, we got back above it, and now we're just hovering around that 54.97, 54,500 area. It's going to depend on what broker you're with, what charting you're using. It's never exact. But if you just look left, you'll see we're in a strong zone of support. So the rule stays the same at the moment for me at the moment. We wait for non-farm payrolls. We are holding this diagonal support. We're in between the moving averages, so that is a range on the 8-hour. So we wait for non-farm payrolls and don't trade as non-farm payrolls data comes out. In fact, typically what I do is I often just ignore it. I'll watch to see what's happening, but I actually won't trade it. But if it is really a good number, you're going to see us turn this into some sort of a consolidation flag or sort. If it's a number that is not that good, you're probably going to see us break through this zone of support that we have here. We do have some gaps to the downside, and if you just come to the weekly here, there's nothing stopping the bears trying to turn this into a double top. So double top would be all the way down there. But if you look at this on the weekly, we're in a strong uptrend. So for me, they're more than likely just going to flip this into a big range rather than a double top. And that range support would be somewhere around 52.84. So when you come back to the 8-hour and you have a look at the long-term view here, you've got a zone of support. If it holds, you're going to come back to the top. You're probably going to come up and test this area that we couldn't get through, which was 56.50 area. Otherwise, what you're going to see is us drop down, and we're going to come down to close gaps. There's a whole lot of gaps in this zone. There's one right at the bottom, and I think there's a little one here somewhere, if I remember correctly. We'll see if we can pick it up in the lower time frames, but that's kind of my view. And then just below this zone that I've got, you can see there's another fairly solid area of support. You can also use your Fibonacci from the bottom to the top, find the 61.8. So in other words, do this, and you'll see the 50 is right at the level I've just put in, and the 61.8 is down here. And you can see there is the gap just above it. So my advice, get your levels in and then keep them in and just trade through the week on it. Now 3-hour, you can see buyers are still coming in here on the diagonal support. I still don't want to be trying to go long here. I also don't want to be going short. So for me, it's wait for non-farm payrolls before you try to do anything. When you get down to the hour and you start looking at the other levels here, look at how volatile yesterday was. We got going and then immediately reversed. So this is still my line in the sand. Okay, it's just dropped a little bit, but 55.46, 55.50 is where we need to get above, find support, and then that's going to flip into looking for longs. At the moment, we are ranging. We're too volatile. When you get down to 50 minutes, you'll see what I mean. So the only constant here is that we're kind of staying below the 150, but we've got to cross over the moving averages here. We've got above the 150, and then more data came out, more noise, and that's what happened. Very difficult to trade off this at the moment, and not something that I'd want to get involved in. Looking at the oscillators in the 15-minute, we've probably got some more to the downside, but that doesn't surprise me. It'll probably be won't be sideways, but it'll be sort of following the trend line here until we get non-farm payrolls, and then we'll make a decision on where we're going. So and come back to 3-hour just to highlight this. You can see the buyers coming in here. Look at these pin bars. Obviously, I'm not going to just jump in here for the sake of jumping in because we are below the moving averages here on the 3 hour. So it's got to be a little bit more cautious. But if we do start getting up above 55, 46, 55, 50, and we start building a base, then we get back into the bigger range, and then you're looking for a move back to the top of this range. And there are gaps to the upside as well. So yeah, I think for today it's sit tight. For next week, look at your bigger levels, get them in on the 8 hour because they're going to be, you can see they're all over the place, but they are going to be critical whether we are moving to the downside or not. And we could just continue along this trend line until we get the 50% Fibonacci or the 61.8% Fibonacci, which are these two here. Anyway, oscillators indicating that we are done with this. We're looking for structure now, and we are in structure. So just be very careful. Don't just jump in for the sake of jumping in. For the longs, wait for that 55.50. Get back above it, then you know that you need to look for longs and pay attention to your moving averages. I think the moving averages on the hour is the one that you really want to pay attention to. For as long as it's like this, we're going to keep sliding down. The minute moving averages come together and flip around, then we're going to start moving to the upside. But the volatility has been so insane. If you look at well, what happened, when was that? Monday. You can see how we fell Monday very quickly, and look how wide apart the moving averages are here. So my suspicion is we're probably going to have a flat number, and we're just going to go up and down, and then eventually the moving average will come together, and we'll look for some more data or catalyst next week to get us going. That's kind of my suspicion at the moment. Anyway, that's it for me. Hope it helps. Stay safe, keep those stops tight, and we'll catch up with you in 2 weeks. Cheers for now.